Hello guys and welcome back to another breakdown. So in this breakdown we're going to do the GU long that I took on the 10th of March. So this was last week. This one was pretty straightforward and it was taken just before London. It was taken, when was it taken? Just after 7 o'clock. And it ended up it ended up closing 10R and then the rest was break even. But this was pretty textbook. However, there is one part that can be a little bit confusing. So let's start off with how I started off. So I've been looking at the market from 7 o'clock. So I'm generally prepared from about half 6. But what I've noticed is, because I used to trade between 6 and 9, but I realized a lot of the time there is no point me starting that early, purely because if I catch something in this period, it tends to reverse for me. And I found between 7 and 9, it's ideal for me personally, and it works better in terms of my concentration levels, because it means I only need to concentrate for 2 hours, which is possible, and it's very easily done in terms of maintaining 100% focus. So let's talk about this trade. So instantly what I look at when I come to the market is this huge impulsive move, which already tells us what's going on. We already have our intent, right? Our intent is our intent is from here. So I don't know how clear you can see that. I think it's probably easier. So we have this broker structure, very easy, and then we need to think about where we're going to look to buy from. Now in this situation, what we can see, there's no real clear imbalance. All we can see is this huge wick here. There we go. So that's the only POI that we can say that we can confidently. This is the only POI that we can say that we can confidently go long from, to at least a minimum. Oh, oops! I did not mean to do that. To at least a minimum of this height. I was trying to be smooth there. I'm not very smooth there. But as you know, my general rule is I look for intent and then I look for confirmation, then inception. As simple as that. That's the only thing I'm looking for. So I already know that when I've come into the market, before I even open my laptop, I already know that this is what I'm going to do. Now, we have our intent. All we need to wait for is for price to come and tap in. So at this point, this is where it can be a little bit confusing for some. Now, this is technically a breaker structure. Now, on my MT5, it did not break structure according to my broker. However, even if it did in this situation, all we need to be aware of is the fact that now we can potentially have a bearish OB. However, because of my broker, I wasn't too concerned about that, because on my broker it didn't break, which was good. However, if this was the case where it did break on my broker, all I need to be aware of is this OB here. Well, even that wick even. Okay. What that means is I need to be able to monitor price at this point, because this could be a reason where price reacts from and then continues, and that could have been the London move, but obviously we don't know. But in this case, what we need to understand is a difference between liquidity grab and breaker structure. Now, price, even if this was a breaker structure on my broker, for example, and say if we have that change in trend on that lower time frame, does it have a reason to go? Well, is there a reason for price to go up? And the reason tech is basically, yes, it's grab liquidity from the low. It needs to come and react from the OB and then continue lower. Okay, so what we know is that price in this case from here, price in this case needs to go from here to somewhere to here at the minimum. Okay, to either cause a reaction and follow through, or cause a reaction and no follow through, or just simply just break the high and take out this liquidity as well. Because generally what happens is when high and low is being taken, right, because that's essentially what's happened here, right, price tends to enter a range before having an impulsive move, whether it's bearish or bullish. We don't know. Okay, that was very messy, but there we go. Okay, but in this case, I'm still sticking to my rules, and all I need to look for is my confirmation. So I went to the 5 second. Now, from the 5 second, what we can see, so price is reacting here. So from the 5 second, what we can see is the breaker structure from here. Now, I think one thing to bear in mind is when I'm trading live, I don't mark out any of these, purely because it just takes too much time. and I'm quite confident eyeballing my setups. So we have 5-second intent, and as far as I'm aware, I think James would take this trade off here, but I think he would prefer to have that 1 minute order flow, whereas obviously I trade off intent, and this is my model, right? So we have 5-second intent, and all I'm waiting for is for a reaction from here, and then I'm going to use the inception model from there. But then what happens is price, I think if I do that, it's going to happen too quickly. There we go. So what happens here is that price ends up breaking this high. Now, where did it come from? It came from this OB itself. Right? Now, you can argue that this is not very clear in terms of this, but the thing is, price, this is obviously a bullish candle. Price has gone up, is retraced, and it's tapped into here. So that can effectively be the refinement, right? But I marked out the whole thing purely because that's what the actual OB is. But from here, we created the high, so now we have our 5-second 2 rule. Now, generally, when we have our 5-second 2 rule, what I would like to wait for is to trade off straight off intent to continue, because we have that 5-second confirmation. The only thing that will make this a lot better is, well, not a lot better. The only thing that will make this much better is, I don't think that's how you meant it. That's not correct English. The only thing that can make this better, there we go, is if there was 5-second order flow, which there wasn't. However, the only thing I need to be aware of is that price can easily come back and react to the impulsive OB. However, because of those questions, we shouldn't be doubting ourselves in the setup, because I can trade a reaction. It may not follow through, and it can come to here, but I can still follow this trade up because it's still valid for me to do so, right? So these are not thoughts running to my head purely because it's gone to a point where it's just second nature to do so. However, this is the thinking that you guys should have, just so you know what's valid and what's not, because it's not very hard to answer the question, is this valid or is it not valid? You should be able to answer that yourself. And if you can't, then you need to revisit the rules and make sure you understand what the rules are telling you, okay? Because at this point, the rules are telling me to go long. It's telling me to go long on 1 minute, on the 1 minute intent, and it's telling me to go long on this 5-second reaction. Now what I need to wait for is the next thing, which is my inception. Now we didn't break that structural high, so don't worry, we just got a wick. Now prices come into this, we go to our 1 second. So what we can see immediately, and this happened very quickly actually, hold on, I've gone too fast, there we go. So in this case, what we can see is we have this tap in, okay? Now, what created this low? This candle has created, as I've mentioned in several videos, and I think it often gets missed, and because I get this question very often about the structure, because this candle has created its own low from its own high, okay? And it's the same vice versa if it was creating its own high from its own low, right? So the high of this candle is here, and the high of this range, in fact, is from here, and the low is there. Now, in this case, what's happened is we have this bullish break. Okay, so we have in our 1 second intent. Now, once we had that, I didn't place an order. I waited for price to come. I don't think I had enough time to place an order. However, I probably could have done it, but just so I don't miss the trade, I waited for price to come into it. So I waited for price to come and tap here, and that's exactly where I press buy as market execution. And from there, we let the price go. It lingered around. It was a little bit scary, but as you can see, it did not violate, and then price continued. Now we need to think about targets. Now, before I do so, let me just drag this out, because by this point, hold on a sec, when we had the next break here, I was already break even, and the price was already flying at this point. Okay, so let's go back to the 1 minute. Now, oh, that's not what I wanted. There we go. Now, remember, with all scalps, you are trading from range to range, right? Now, remember what I said, if this did break structure on my broker, this would be the valid POI to watch. However, generally, once I've entered, I don't really watch. I just look for my target point. Now, if you are taking the trade from here, right, as you know, for the scalp model, right, you are trading from range to range, okay? So in this case, it'll be from here to here. In terms of my broker, however, it'll be from here to here. Okay, and generally I set my targets a little bit above, just because it should be taking that liquidity out anyway. But it's up to you how you want to take it, if you want to take it exact or a little bit above. Now for me, in terms of my partials, I either take a partial at the high or I take the partial at 10R, depending on what's feasible, because I like to take partial at not 10R, at 10 pips, purely because 10 pips either gives me 10R or 20R, and at that point I can either close 5R partial or I close a 10R partial, whatever I use in terms of my stop loss. Okay, I don't tend to, because I know structure is that valid point, but sometimes structure doesn't give me the risk to reward that I like to close. But if price does reach here, which it does, for example, like price reached here, okay, at this point, it's hit your target. So this was a winning move, okay. And I think some of us don't set our targets this low purely because of the risk to reward that we know we can achieve, right? So that'd be what? It'd be a 1 to 8. Sorry, not even 1 to 8. If you're using 1 pip, it's a 1 to 8. But for me, it would have been a 1 to 17, 17.8. For some of us, that may not be enough, so we don't set our targets there, even though that is the best way to set your targets. But it's up to you if you're gonna take it that way, because some of you can start complaining that when price goes back to break even, and you start questioning the strategy. But the thing is, the strategy has won here. You have a winning trade here. You've managed to reach your first target, right? But you just need to be able to accept that. Now, if you're not happy with that risk to reward, then that's on you. Okay, it's not on the strategy. That's on you. Okay. But at this point, obviously, I want to take my partial at 10 pips, so which it eventually reached. So it reached my 10 pip target in 9 minutes. So in 9 minutes, I made 10R, and then I was done. For me, once I've hit a trade, right, that is enough for me to finish off the day, and that was completed in when. So I logged on just before 7. So just say let's say from 7, and I was finished. I was finished work in 11 minutes. Well, not 11 minutes, sorry, 12 minutes. That's when I executed, and the trade was finished in a further 8 minutes. So 20 minutes in total, just for doing that, and then I was finished. So you need to think about in terms of rate of return. Rate of return was incredibly high on this trade. To hit 10R was great, obviously, on this trade as well. Not 10R, sorry, yeah, 10R partial on this trade was perfect. And obviously, whatever happens next, I don't mind. But once I've entered the trade, what I tend to look at is generally the hourly, just to see where price should be going. For me, price looked bullish at this point, because what we can see, and this was just random first glance, because what we can see, low, high being taken, then high being taken, we've got bullish rules, right? So I should expect price to continue higher, right? So I knew that we had partial points to take out, and then I went to the 4 hour. This is what I do once I'm in the trade, just so I know where price should be going. Now on the 4 hour, as we know from the weekly outlook, we do have that daily POI, which is all the way up here. So if price did go there, I wouldn't have minded, but obviously that's what we sort of plan as you're in the trade. But then what eventually did happen is price went all the way up. It carried on going a little bit further, and then it went back to break even. I think, where did it get to in the end? It went to 1 to 34.4. Yeah, 1 to 34.4R in the end. But obviously I only banked 10R from this trade, which was perfect. It was enough for me, and whatever happened after that I didn't really watch. But that was me done in 20 minutes of work, hit 10R, and I was complete for the day. I was content. And I think for me, this way of trading has definitely my focus is 100%, and I'm able to focus for those couple of hours that I'm looking at. I mean, this only required 20 minutes of attention, and I was done. And this is what we talk about in terms of, you can use the rules however you like. It's more about developing your style, and one style will not fit everyone. As you know, between me and James, we have 2 complete different styles, but the rules and the approach is the same. It's just our trading model is different. So the trading model for this one, you know what? I hate when I draw, because I know I leave so much on the thing. Yeah. Okay, I'll take them out. So for this one, what did I do? So we had 1 minute in 10. Why is this not? There we go. We had 1 minute in 10. Let me change that to black. There we go. And then inside of that, let's move that in there. We had a confirmation of the 5 second of the 2 rules. Rule 1, why is this confusing me? Rule 1, rule 2, and then price came down, and then where's my arrow gone? I thought I had an arrow. There we go, that's a make do, and then I did intent, and then the trade was taken off there. I hope the visual representation gives you an idea of, you know, how this trade was taken. There we go. So that's how it was taken. So we have our 1 intent. Okay, and then we have the 5 second 2 rules. And that was our confirmation. And then we had 1 second inception, rule 1. So that was the model for this one. So as you know, everything that stays the same, the things that stayed the same, sorry, is my 1 minute intent, or not even the 1 minute, whatever intent, is the intent and then the confirmation. That all stays the same. The only difference is where I'm going to incept. At this point, I couldn't incept the entry point 1 because price didn't reach there. I had to incept entry point 2. Now, when I incepted it, because it was entry point 2 and we had obviously the 2 rules, the entry was taken off rule number 1 of the inception because it was available there. That this is the only variable I have, which is perfectly feasible because it's easy to have a variable of where you're going to incept. It's just, thing is, this is not even controlled by me. It's controlled by obviously what the market allows you to do, because the price obviously didn't go to the impulsive OB. If it did, I would have incepted that. It's just a matter. That's the only variable, because, you know, that's what allows me to be. This is what allows me to be consistent, and something that I've mentioned in almost every breakdown that I've done is that this is the only thing that I look for, and that's me done. Okay. And this allows me to focus for and look for this one thing to the point where I don't need to mark any of this out. I can just look and I know what's already happening at that point. And then I'm in the trade and I take my partial and then I'm done. Right? Well, I hope this video was useful to you. I know it was a very simple and basic trade, but I hope there was something that you could take away from it. And I'll see you guys in the next video.